Hi, Rajiv. Good to see you. Thanks very much for
Carl,
taking the
thank
time to
you.
talk this afternoon. I'd like to start off by asking you to give us a really quick overview of Spear Street. Just tell us a little bit about the company, its history, and what you're doing now.
Sure. So Spear Street Capital, we're a private equity fund. We have an office in San Francisco and an office in New York. We acquire commercial office, we develop, we reposition, all facets of value add from Canada, the United States, into Europe. Started our company back in 2001. At that time, anywhere you found technology-oriented volatility, you found us. And started our expansion into Canada about 15 years ago and into Europe probably about a decade ago.
Talk a little bit about any observations you've made over the last 13 months.
Yeah, I would say the observations, I don't know if they're all that different from any type of things of volatility. And, the interesting thing about volatility is I always hear people say, well, no one could have anticipated a pandemic or no one could have anticipated, a financial crisis. Well, that's the point of volatility. We don't get to judge the sources of volatility. They just create the outcomes they create. And the interesting thing is, I think the natural human tendency, and you hear it, you read it in the press, and I think it makes good storylines. People like to take small sample sets of volatility and then extrapolate into trends into the future. And, so I think, I'll give an example, early 90s, no one was going to work in urban areas because of urban crime. The last 10 years, the suburbs were supposed to be dead. 2001, no one was going to work at the top of office buildings because of terrorism. The last 5 years, WeWork was supposed to take over the world, right? Long-term trends and homogenous behavior around physical space is just impossible to predict. It's the most difficult algorithm on the planet, which is how people use physical space. And so I think, my takeaway is you're already seeing a lot of those trend picking occur. We've been seeing it for the last 12 months. Almost all of them will prove to be inaccurate.
So we started working together in the middle of last year, started with a couple of buildings. And the key driver at the time was one part digital amenitization of your portfolio, but the other one was about data. And you have really talked a lot about data, but it's not just any kind of data. You keep reminding me every time you talk to me that it's worthless unless it's actionable. Could you talk to us a little bit about what that really means to you? And how do you think that distinguishes effectively how you're looking at the value of data and how data is driving value into your portfolio?
Yeah, and I think I'll start by framing it, which is, if you look at our industry, and I'll be specific to commercial real estate, we have antiquated statistics, right? So if you look at vacancy rates are extremely antiquated, right? With the obsolescence factor of buildings in so many markets, people tend to focus on that number as if it really tells you something. Leasing absorption is a very valuable thing, obviously, because it gives you the economic velocity of a marketplace. But vacancy is a really tricky stat. What you really look at and you're trying to assess is the notion of elasticity of demand in a marketplace, which is, as an owner, if you're going to go in and you're going to reinvest into your real estate and reposition a piece of real estate, who are you doing that for? And what kind of pricing power does that give you? And the ability to understand the composition of the employees within your building. What are they doing? What type of services do they want? And are those the type of employees that a tenant is going to pay more rent for? Is really critical and foundational to our business, right? And we tend to mix all of those people together, right? We tend to not think about discrete user groups in a company, or what the composition of those employees. And we mix that all into the phrase marketplace, right? And the problem is one of the trends we're seeing, and we were seeing it certainly pre-COVID, and we're seeing it during the pandemic, is assets are differentiating. And you can have a marketplace that is showing weakness, but individual assets can be showing incredible strength. And the ability to determine and differentiate that idiosyncratic behavior among assets is becoming more and more important as an investor, right? And That requires your ability to understand the specific people in your building. What are they doing? What services do they value? And are they the people that can help drive higher rent so you have a return on your capital investment?
The previous statement about the difference between deriving value from alpha versus beta. Talk a little bit about that.
Yeah, so the notion of beta, which again, every investment has a component of both, right? But I think beta, which is market appreciation, tends to get overblown in real estate.
All boats rise with the tide.
All boats rise with the tide. And I'll use an example. I mean, if you look at pre-pandemic, San Francisco was infallible. Now all you read about is how many people are apparently leaving San Francisco. Whether that's true or false, that's not something an individual owner can control, right? And I think it's one of the clear lines between betting just simply on market appreciation. You're more of a speculator than you are an investor. And the real question is are you picking assets that are defensible? And part of an asset that is defensible is not only because of its physical infrastructure, but it's because of the people that sit within it. Again, does that building play a critical role in attracting and retaining employees? When it does, those tenants tend to be stickier and your pricing power tends to be greater as a landlord. And so your ability to differentiate that, to understand why one asset in a market that may have, some weakness starting to develop, well, how one asset will fare relative to another is really important. Data is really important, the right data of understanding what is the composition of the rent roll and the people within one building compared to another. And I think in times like this, where you see market volatility, asset differentiation is everything.
Great. Well, thank you very much. I appreciate you taking the time to speak with us this afternoon and to the rest of the Realcomm CIO Forum.
Thanks, Karl. I appreciate it.